Good morning, everyone, and welcome to the European crossover webinar. We've seen the cable really get whacked a little bit. We're talking about it with a few of the guys, and we had taken out those highs, recent highs on the 2-hour chart, and those PMI numbers just came in horrible. And I tell you what, this is really disappointing for the bulls. But we'll go and take a look at this story real quick. Amanda and Saeed both say good morning. Good morning, guys. And Amanda says, thank God it's Friday. Okay, so let's take a look at, and take, we're going to go in and we'll jump in the charts. We'll take a look at dollar yen, cable. Euro's dead in the water. It's in no man's land. And we'll also take a look at dollar CAD, which for, I'd say about the last 30 hours or so, has had a bit of a dichotomy. It's continued to keep its bid when crude oil has rallied. Yesterday when it attempted to rally. Now crude took another slip, but it did come down to the 44.25 area on the 30-minute chart, and it bounced nicely. But I mean, the one thing about crude, once it really hits a good stride in a direction, they really like to play that overall. I'm saying overall in an overarching mode, like let's say a 7 to 10 day outlook. It'll play that, and I tell you what, it's really playing to the hilt right now. My whole target always along was going to be 44.50. We've exceeded that with 44.50, a bounce back. Initially, it was going to be 45, and then a quick dip to 44.50, a bounce back, which really it looked like it took forever to ever get there, and then ultimately 42.50. I think we've come into a value area, but I tell you what, the sentiment is so overwhelmingly bearish, and the funds or whatever are just going in that direction. Plus, we've seen a really, RBOB has really had a tough time. This is seasonally the weaker time for crude, so it all kind of plays into it. We're a little bit overdone, so you got to be careful on Friday. We're still in a pretty good area here, but this 44.50, 44, 44, it's going to be a decent area where they'll try and hold them up a little bit. We're kind of pulling back in that direction. But we're going to the cable, but as I said, the dollar CAD, we've got some news up ahead. We're in a key area at 31.31, but the weekly close is probably going to look amazing, so you got to be cognizant of that. But we'll take a look here at the cable. Sterling dived and gilts rose on Friday after surveys showed business activity had wilted in the wake of the Brexit vote, bolstering expectations that the BOE will have to do more next month to stimulate growth. Britain's benchmark stock index, FTSE, erased earlier losses to trade higher, bolstered in part by a weaker currency, which should bolster export earnings and hopes of more monetary stimulus. PMI surveys of sector purchasing managers fell to 47.4 from 52. Anything below 50 is generally considered, just lost my train of thought. Not train of thought, but what I wanted to say it, but in a contractionary mode. So anything below 50 is always considered a contractionary type mode. So PMI survey of services sector, purchasing managers fell to 47.4 in July from 52.3. Its steepest drop since records began in 1996. Can you imagine how overwhelmingly bearish? I was talking to some of the guys, and cable was trading like, I think around 31.58 or something like that. And I posted a chart for the Cardella gang, and I say, hey, look, this is bad. I go, we not only took out the highs, but look at all the closes we've taken out on the 2-hour chart. And we've seen that. And I go, this is not, and I hadn't even seen the news. I was just saying, hey, this doesn't look good for this. Very disappointing for bulls. Coming into a Friday at the end of the week, most of these guys and gals are probably just saying, just get me the hell out of Dodge. Get me the hell out of Dodge. And so I told them, I go, you're going to see that pressure, because that's what's going to happen is people roll into, let's say even from New York trading, they see this and they go, well, hell, I don't want to be long on this thing over the weekend. And, because if we look on a 2-hour chart, we've taken out, remember how we did it in the yen on the opposite way? Like to the upside with that 2-hour chart I talked about, that 2-hour close on a Tuesday, and I said, oh, this is going to open the door for boom, 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 higher. Well, we're seeing the same thing in the cable, but in the reverse. Now, it doesn't have the same momentum that the dollar yen had, but I'm saying is taking out a crap load of closes on the 2 hour chart, is, I mean, that's how we're going right now. We'll have to see how we close at the top of the hour. That's just horribly bearish. So anybody that's long has just got to get the hell out. Pedro says, can you look at the spoos? Yeah, we'll try and see if we can get some time there. I just don't focus too much on it. And I'm glad I haven't, because the spoos haven't done a whole lot. So I just don't spend a whole lot of time with the spoos. I've made some decent calls over time, but I just don't really focus too much on the spoos that much, unless I think the only way I could consistently do well every single day is if that's all I look at. The spoos, Dow, and the NAS. And, because the spoos they're their own animal. They trade within their own trade. You know what I'm saying? Where you see moves that, that during the day that, you see a lot of continuation. So if you're on the wrong side of the market, you can get run over. You really have to keep your stops pretty tight when you trade the spoos. And, it's just not really my game. I've made some overall good calls, but, to day trade all the time, I think that's all you have to be doing. It's just really following the spoos, and then what earnings reports are coming out, what Apple's doing. Apple's breaking keys, so I don't want to look at that stuff. I just don't want to. But we'll take a look at the spoos. But anyway, I think that's the way that you have to look at it to successfully do well, day in, day out. And that's just not my game. It's not. I'm talking about keeping track of what Apple's doing, and and it's breaking this key level, so obviously that's going to weigh on the NAS, and obviously it's going to weigh on the spoos. It's not my game at all. Anyway, so it says the manufacturing PMI fell to 49.1 from 52 in June, the lowest since February 13. The composite index, and don't forget, this is very important. What you have to think about is, and Fridays we kind of encapsulate, or sometimes we'll look at overall, strategy, or we kind of look at the way approach you want to look at trading. So and there's probably not going to be a whole lot of news happening. Now look at this, 31.18. You see, I mean, I was telling the Credelli gang, I was telling them, it's just going to continue to weigh on it, because, like I said, you have to look at it this way. You can look at the levels, which is true, but remember on Fridays I always place a lot of emphasis. Something I learned from 50 Pips is, he used to say, which probably still does, but, on Fridays, they're going to go with that flow. And if anybody's on the wrong side of the market, they're going to get punished. And depending on how far it wants to push it. And when I say that is, look, we just got that breakout on the upside in the cable. And now we've turned around and reversed that, and they're just leaning hard to the downside. And so you have to think about it. Well, wait a minute, it's Friday. A lot of people are going to say, because there could be some people that were bullish, and they might say, okay, I'll buy it here on a dip, and I'll, watch it come back up, and I'll scale out. On a Friday, you're like, no way, dude. I do not even want to be thinking about holding this over the weekend. A perfect example, I'll give you this, the dollar CAD. We're in a very key area, 31.31, and we kind of pulled back a hair from that 31.31 on the initial pop. But I was like, oh, you know what, that's not a bad play to play for just a scalp side. And I go, but wait a minute. This weekly close on the dollar CAD is going to look pretty good, and crude is still very weak. I don't want to hold this thing over the weekend. And that's what I'm saying is traders that are on cable then say, I'm not going to buy this thing on a dip because I don't want to have to hold it over the weekend. I mean, it's not a matter of whether there's risk to hold over the weekend, but when you see the weekly close, I'm talking like in CAD, but when you see the way how the market's been turned around, and now they're going with that thought of, the Brexit is really impacting, and then the overall mindset is that the BOE is going to have to do more stimulus. Then when they come in next week, they're going to have that bear's bent. So you end up buying it, let's say, here or whatever, or maybe you bought it 20 pips ago and it's lower, and come Monday, now they're pressing into the, let's say 30, 130.10 or whatever, and you're like, oh no. So that's what I'm saying is you have to look at it that way to see what kind of pressure is going to be on it. But it said the composite index, which combines services and manufacturing, slumped to 47.7, the weakest since April of 2009. These PMI figures look horrible. Absolutely horrible. Markets see these levels were consistent with an economy shrinking at a quarterly pace of 0.4%, a rate of decline not seen since the 2008-9 recession. Sterling has been hit quite hard, as you would expect in the aftermath of the very poor capital PMI figures, said Richard Butcher, chief FX broker at ETX Capital. Data is going to be overanalyzed in light of the Brexit decision, and the data is disappointing. Sterling has been supported this week by hawkish comments from two BOE policymakers. Christian Forbes said on Thursday, the central bank should not rush to cut interest rates, mirroring comments from Martin Wheel, who also said he was unsure if he would back a rate cut at next week's meeting. Let me tell you, they're going to be backing a rate cut. Let me tell you that. Because here's the deal. And one of the things that Blake was saying about the RBNZ, and I'm not going to get off on that, but I mean my tirade, which is a bunch of BS when people try and give the Fed a hard time when it's the only central bank that has credibility. Because like I said, you saw what the RBNZ did. Now you see these clowns over here, they're hawkish. Let me tell you, they're going to have to go and flip that wagon and go in the other direction, because it's no use buying yourself a $150 lock when the horse has already broken out of the gate, and the horse is about a mile down the road. And you say, well, I got that $100 lock, and that'll never get out now. What good does that do you when the horse is a mile down the road? And that's what I'm saying is they're going to have to cut those rates now, or this upcoming meeting. It's not going to do any good if this market really starts to slip. If you wait too long, then it's really going to pull back. So they have to be, obviously they're not proactive, but I would say on the other hand, they're probably not reactive the way the RBNZ is. But they're going to have to cut rates. They're going to have to change that tune pretty quick. So that was a variance with the opinions of most other rate setters. The BOE said last week that most of the 9 members of its Monetary Policy Committee, also generally referred to as the MPC, expected to give the economy more help at their next meeting in early August. The abysmal reading will mean the BOE will be sure to ease monetary policy at the August meeting with both an interest rate cut and another round of quantitative easing likely, said Jay Trask, currency strategist UK Forex. And that's my take. Look, and the cable continues to weaken. We'll go in and let's take a look at the economic reports that are coming up. And you can see here's where they got whacked. Just horrible numbers, absolutely abysmal, as it says. We got Canadian CPI numbers, and we also have Canadian retail sales. So those will be the big drivers. We do have a market manufacturing PMI flash, which will be key. That's not till 9:45 Eastern. I'll jump back. And take a look here on the yen. No real news here. So we'll switch over to the charts. And be just a moment, going to go and post something. Euro kind of weakening after sitting there for the longest of time. I think the cables begin to weigh on the euro at this point. Not a whole lot, obviously, but the euro's been sitting there in no man's land for quite a while. Okay, so let's go into these charts here. I was going to take a look first at the dollar yen, but there's actually some pretty good news that's happening right across the board. With the exception of euro. Dollar CAD at this key level, dollar yen here obviously for cable. Let's take a look at this cable. By having it real big, it's not, I'm not getting a good view of this. Okay, here we go. So here's my take. Remember we talked about the dollar, and we kind of went over that ad nauseum, but I think it helps us. And that's why I do that, because I already have an idea of what I think. Doesn't matter, so I'm saying is, when I try and, talk about something to sound like a broken record, it's for the benefit of everybody else. But here's the key. Now, we talked about this, they talked about this inverted head and shoulders, and, there was always a possibility. My take was this one here, this head and shoulders, come back down. I thought, okay, one of the things that I like to do, just to get perspective, when I see something like this forming, I don't think could come to fruition now, but just to give you some perspective. I never think to myself, for those that just don't see it, I'm trying to be a little bit accommodating for you all. When I see this, let me see, I don't know if I can do this. Oh, I didn't realize I could do that. Okay. So when I see something like this, I don't go, oh, okay, well, we've got a head and shoulders. Now, I'm already getting short, and I'm looking for a break here, so we're going to 127, which I talked to Blake ago if that would have been fruition. Come to fruition, that's where it would be. I don't play that game because I've learned from Blake is most times these damn head and shoulders don't even work out. But what I do is I play the anticipation of the move. And that's what I was trying to tell him the other day. I don't go in and say, usually even further back in here, I don't go and say, oh, like I said, it's coming here, we're going to 127. I'm telling you, this thing's over with. That's been the overall trend, blah, 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 blah. No, I just play the anticipation of the move. And look, and we talked about this in the room, chat room. That was my whole take when I shared with the guys and gals. I kept saying 3097. So look, here we go. You see? And now we get the pop. Now some people start saying, okay, now we're moving higher. Okay, so pop, so what I do is I play the anticipation of the move. I don't worry. If it eventually breaks, then we all know where it's going to go. That's my take. If it breaks, we all know where it's going to go. So then that's what I was telling people, hey, look, I even had, like I said, when we mentioned buying it, like I said a couple of days ago, buying it on the 3097, it popped back up. I go, hey, look, it's only a scalp, it's going to last, blah, 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 blah. And I said the next key area was the 3057 area, and here it is. Now I was just looking at the 2-hour charts. Most of my stuff is based on 2-hour charts. And so we got this nice bounce back. And I think people thought, this move here, and here's the 3223, that key level I've talked about. And look, that's why I have not updated these charts at all. Not at all. I mean, I might move a thing here. I have not put in any levels or anything. This stuff's been in place since this last weekend. But so you can see the significance of 3223. And once again, I always say about the touches. So as we came up here, it looked pretty bullish. I mean, I was even saying yesterday, day before yesterday, something like, well, I'd be covered. And I go, God, I don't think there's anything at this point now. I mean, to the downside, I mean, obviously it has the doors open. I go, if we get past, let's say the 135, we're obviously going to blow doors, potentially go to 140, but everything looked good for the bulls. Looked very good. So you come over here and look at this. That looked good here, right in here, as we're going past these highs. Look at that. And we blow doors up here. You take out, the significance is of, cable does that all the freaking time. I mean, that's its modus operandus. It goes in, you know, obviously it probably did this in anticipation that the report's going to be good. They blew past here. They took out all these closes. I could told you, I don't give a doggone about no doggone the high, the low. That's all a bunch of bull, you know what. What I go with is the bodies. So look at all these closes or opens, okay? So it takes out that high. Obviously the news is bad. So we start heading lower. Now, look at all the closes you've taken out. This is horrible. It's the same thing that I told y'all about the dollar yen. These aren't 5-minute bars. They're not 10-minute or 30-minute bars. These are 2-hour bars. It's now taken out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27. It's now taken out the last 27 bars of 2-hour bars. And this is what I was trying to say in one of the chat rooms. I said, now there's going to be a little bit of support in here, right here. So if you're short, you could go in and cover right here. You see these bodies? Right there. You could go and look for a cover right there. If I was short, I probably should have taken that short when I saw it because it was at 31.58. I would get out now. Doesn't mean that it's got the selling is going to quell. Like, okay, it'll you know what I mean, that we don't work lower. But on a short-term basis, if I'm short, I'm getting the hell out of that jail. I'll cover right there. You see that? Nuts. 31.10. And look what the low was. 31.08. I'd go and cover my shorts. But my point is that's what I was saying to the guys about, oh gosh, it was about an hour ago, or maybe 45 minutes ago. I go, I posted a chart, I go, this is going to look bad. This is very disappointing for the bulls. Because if we come into a Friday, they're just like, forget it. Let me just get out. I'm not, you know, that's going to be the driving sentiment. It doesn't mean some people are going to say, you know, I really believe in this, I'll buy it, I really don't care, and if it dips down to 30.25, I'll buy some more. Because maybe they're looking for a week out, maybe they're looking for a month out, so they don't care. But for the immediate, this is the driving factor. And that's why when some gentleman asked me yesterday, I had a thing on Twitter, and he goes, what do you see in the euro? And I go, I've got nothing at the moment. And I was being honest. And I guess the guy thought I was being coy. Look, I said, with the trades I give, they're all for immediate trades. The euro was trading in the teens. I go, I don't have anything. I'm not being coy. I'm not trying to hold back. I don't have an immediate trade. And that's what I was trying to tell that gentleman. I go, yeah, overall, we discussed it even yesterday. I think we're going to go to between 826 and 843, but I didn't have an immediate trade. I couldn't say, wow, we're going to launch from the teens. Well, we launched what, 20 pips almost? And have we gone down? No. So I just haven't seen anything. So that was my take. Oh, okay, someone's asked me a question. So that's what I'm saying. If I'm short cable here, I'm getting out here. That's 31.10 because these touches. So we're going to put this here. And it's not, and like I said, at least we were there. So it's not like after the fact. I would have shorted here. I would have shorted there. Yeah, okay, whatever, dude. I'll put this here just so it stands out a little bit. No, that's what I'm saying. It got it. Well, I think we're at 31.14 or 15. Oh, doggone it. Now, I myself, you know me, I wouldn't have ridden that thing all the way to the bottom. I would have happy to get out at 25. But I'm saying, you see here now we're at 24 right now. And when we said this, I think we were at 31.14 or 31.15. Anyway, I'd be covering my shorts because you see we're coming into these bodies. It's been a very nice move, but you have to think of it, you have to look at the other side of the trade. And not that people are going to be buying it, but I'm saying is, if you're short them, you're saying, where's a good place for people to say, because maybe you didn't get short until 31.45. Maybe you didn't get short till 31.35. But you have to think about the people that, oh, not the guy or gal that supposedly showed it right here at the top. But in here, sub 32, you're going to go, wow, at what point do these guys say, wow, I've got a good profit. Let me cover. And so I think that was right in here, this 31.10, the lowest 31.08. And we were trading, like, so we came on, I think we were trading at 31.14, I think. So it wasn't like I'm saying after the fact. But yeah, the PMI numbers just look horrible. Just look absolutely freaking horrible. And I'm not keeping this, I'm going to get rid of this because I don't want anybody to think that now I'm saying, oh yeah, you see that this head and shoulders are playing out. Hey, look, yesterday I said, hey, there's just nothing here. And yesterday I even told people yesterday, I was telling Michael, hey, look, they're going to be buying the dips. I'm telling you right now, they're going to be buying the dips. And look, I said that in the chat room with the Credilla game. Good. And look what happened. I said, they're going to be buying the dips. I'm telling you right now, and I go, they will be buying the dips. And that's exactly what happened. Yeah, but that's the way they're going to go and play it because we got what we could on this move down here. So as the market came back and it started moving higher, on this move here, on the pullback, they're going to buy the dips. That's what I tell people. They're going to buy the dips. They're going to buy the dips. And we started moving higher. Now I look at it once again as it broke, and I wasn't up when the news had come out. Maybe I was up or just got up with it. I wasn't paying too much attention. But once we got into this 31, we were trading. I was kind of like, oh well, God, look how much it's fallen. It was at 31.58. But I told the guys, I go, this chart looks. This is very disappointing to the bulls. It's very disappointing. And look, we've continued to press it. But I think we're pretty overdone here at this 31. Wow. Man, we have already come and come into our break time. So we'll take a look at the dollar yen, and we'll try and look at other things when we get a chance. Thanks for joining us on the crossover. Usually on Fridays we kind of look more towards a strategy. So we'll take a look at the others when we get back. And thanks for joining us on the crossover. So let's take a look here at the dollar yen. We've seen a very nice pullback, in the yen, which took it right back up here to the 650. And for those that took advantage of that, I didn't. But because I kept thinking, hey, maybe it'll make it all the way up to 682, and that's going to be the key area. Well, both of these were very key, and I said, hey, look, if it got above 682, it's back on. Yeah, what a pullback from that 650. I mean, that was just fantastic. After it started falling, I was thinking, man, what a dummy. I should have gone and taken the 650 because from a risk reward, you couldn't beat it. Couldn't beat it with the stick. I covered it at 605, so I guess if I covered a little bit of better area, like at 575, maybe I would have done it. That was a mistake. I should have gone and taken this. But we pulled back, but look how this 573 held them up. And look, what we've done is, for the most part, we've stayed within this zone. I mean, we had some outliers. Okay, this certainly was, and but overall, we've stayed within the zone. So we'll see what they can do to push them up. Obviously, on the weekly close, it would still be bullish. Let's take a look at this on the weekly close. So let's take a look at what this looks like on a weekly close. Overall, still looking pretty good because you had this bar here. Honestly, not as impressive as I thought it would have been. For us to do some real damage, we need to close above 703. The previous high was 658. If we can get past 658, that's going to be very good. But to really light a fire, we need to get past really getting past this area would be something, but really right here, 699. Yeah, if you take out 7, this thing's on fire. If you take out 7, it's still pretty weak. I'll take a look on the daily. I didn't even see that. You see it on the daily chart right here. So that return moved to 750, which is well, we had talked about the 750s anyway. Not say, oh, I don't know what I'm talking about. I meant the 650. So yeah, there was pretty good reaction there. But let's take a look at what they look like here. This is an unbelievable close. I couldn't even believe that close. We pretty much engulfed it. The key is right there, which is 637 on a daily chart. That's pretty key right now. If we can close above 637, let's go and mark that off. If they close above 637, that's going to be well, that's 655. A close above 655 just opens a freaking door. It really does. So it's once again it's that 650 area. But you see here, you would take out this close, and you'd be above this level here. That's where they held them before. So if you got above 650, if you got a close above 650, that'd be huge. That would be the key right there. A close at 650 opens it up. I mean, that's where they're going to want to take them on. And here's that 650. We were talking about that all along on the way up and got knocked back pretty good. And I think 662, I think was the 61% at the time. We've done some good work down here. I mean, you see how they defended the bottom of the zone? Very good work. And this bar here, this close, pretty solid. If we get a close above 637, there's that 637. Let's mark this out. If we get a 2-hour close, $637, let's mark that out. This is just really for today. $635. We get a 2-hour close above 635. You better be careful on the upside. Let me tell you that. The BOJ is next week, so we finally got that pullback we were talking about, although from very much higher levels. My take was I thought this thing would only get up to 685-ish. Maybe we could even go almost up to 7. I didn't see this stuff happening, and I almost got knocked out of the box my own self. But you get a 2-hour close above this 635, and I know 650 is up ahead, but you better get the hell out of the way. That's my take on that. You get that 2-hour close above here. They've done some yeoman work here. And notice how this 573 is held up. they've done some yeoman work here. This is pretty doggone good. As bearish as everything looked, that's pretty doggone good that they did that. And then they got this close. This close here, took out all these closes here. Right there. You see how that augured for a point higher, and now we're doing it? We'll have to see how it closes, but we get a 2-hour close above 635. I'm telling you right now. If we get above 635, I mean, they may try and lean on them against the 650. You get a 2-hour close above 635, I would not be taking on that dollar yen, especially going into the weekend. If we get a close above 635. Just a moment, saving my work. That way if something happens, at least I have the work that's already been saved. So, look, here we are now, we're pressing it again. We went to that 30.97. Like I said, I'd have been covering here, but you see how they're pressing it? That means, like, that's what I'm saying, is that going into the weekend, it was going to be hell on wheels for bulls trying to hold their cable longs. And I guess right now as we come to the New York session, these guys and gals are seeing those numbers that weren't up for the UK number, and they're just getting pressed into that. And like I said, I'd already been covering, I'd already be gone, but I tell you what, they're pressing them again for another trip lower. And we'll look at here. Here's that 30.97 we talked about before, right there. I would think it'd be quelled here. I mean, most of the people that had to get out, not most, but I mean, not everybody, but I mean, those that on a short-term basis, they're already gone. But let's go and move into the dollar CAD. So we're in a very key area here. Now, I will note, I talked about it in the chat room, we have an interesting dichotomy here. I'm seeing crude continue to open up a little bit higher after going down to that 44.24. Now, crude is weakening, but now it's coming off its lows. But what we're seeing is, as I was talking about the dichotomy, is every time crude would start to rally just a few bits, dollar CAD would give up its gains, lickety split. But now, see, although crude's overwhelmingly weak, but we're now about 60 cents off of its lows. And you're just not seeing dollar CAD give up too much of its gains. So that's what I'm saying. We're starting to see a bit of a change here. Here's where I got short, and then as soon as crude turned around, dollar CAD gave it back real fast. So now we're starting to see a little bit of a dichotomy where crude starts to rally some, although it's overwhelmingly bearish, and it's a Friday. So it's not like anyone's going to, I don't think, buy crude with both hands. But we're not seeing the dollar CAD pull back much. So let's take a look at the weekly close for dollar CAD. Dollar CAD has been doing some work down there. They just can't get up for nothing. But this, if we get a close above 31.39, frickin' forget it. And we've got that data coming out. And crude's still weaker. So you have to be very careful with this. Right there. 31.39. You get that close above 131.39, you better not get in the way of this train. Well, it's on a daily. Mark it off. Let's take a look at it on a weekly. Really, on a weekly, it's 31.13. On the weekly, a close above 31.13 really opens this thing up. If we get a close above 31.13 on a weekly, you better get the hell out of Dodge on the short side. Personally, I think crude is looking really way overdone and a very nice buy. And I was talking about this, I mentioned the 44.48 as we were pulling back, but the low was only, looks like 44.59. But I'll tell you what, I think people are very, going to remain bearish on crude, and it's really opening up the door for the dollar CAD to move higher. Also, another thing that may play onto it, not that anyone expects it, we'll have a meeting coming up that's going to weigh on the dollar CAD. And I think also, once again, also with the BOC, most do expect them to cut rates. So, but they haven't been doing it. That's one of the problems. But I'll tell you what, on a weekly basis, we get above 31.13, and this thing could go off to the races. Well, look at that cable. It continues to be just weak as all get out. Let's go and take a look here at the Australian dollar. Now, after it's pulled back, as you sit here languishing, I really just don't see anything here. If we break 74.50, we've done some work here. So, I wouldn't do anything in this till next week. I think that there's still probably at least one more dip. We've got some very nice resistance here in crude oil. It's a very good area here. There's 44.92. No. I never trade on the webinar here, crude, but I try to take a real quick look pop on this thing. But we'll just move into this real quick just to show you. I didn't see until it's pulled back. I put my limit here at 92, but I didn't get filled right now. Because it's already pulled back. But if you look here, you see the footprint here, 79 to 0. And look at this right here, this 44.92 here. This is how I usually trade. But we had, we're really overdone here in crude. That's why, yesterday we were trying to buy it. And we actually made some money. We were just scalping it. That's all we're doing. And it was later on in the day. And I told people on the way back down, I said, hey, look, if you see 44.96, this is not good. And we did, and then that opened the door for us to keep on moving lower. But this 44.92 is pretty key. 44.95 is at 38%. So this is on the 8-minute chart. You see right here, 44.95 is at 38%. And then look on the 30-minute chart. 44.92 is a level here. So I tried to go and look at this right here at 44.93. The footprint was 0 to 79, meaning they were like, "Get me the hell out! Just buy it. I need to get out of my shorts." That's what they're basically saying. That's what the footprint is telling you. So I try to see if I can just grab a quick scalp. But I tell you what, you have to be careful because this market is way the hell oversold. Just way the hell oversold. The next key levels is 45.17. That's what I was really disappointed late in the day when it couldn't make it up to that area. We talked about that on our scalps. We were looking at 45.12, and I said, hey, 45.17. When we couldn't make, and it actually hung around there for a while. When we couldn't make it here, you see right here, when we couldn't make it to 45.17 and we hung around there for a little while, that was very bearish. So we came back down, and I told them, I said, hey, look, if once you can go along at the 44.92, we dipped, I think, as low as 89, and we jumped back up, and I told people, look, just try and grab out 45.08. And I think that was right at the high. But when we started to come right back down, I said, you know what, this thing, it's very at the end of the, almost at the end of the, well, towards the end of the electronic trading session, but I told myself, you do not want to see 44.96. You do not. And sure enough, then the wheels, fell off the caboose late in the day. But we're in a key area, but 44.93, 44.95 is at 38%. We only made up to 93. You see the footprint here, but we're really oversold here. Obviously, you see here, there's a ton of orders here at 45. So maybe we can take one more little goose them up, and then they can pull back a little bit. You see, not a ton, but there's a decent amount of volume here sitting on 45, and there's a footprint of 79.0. 44.92 is the key level here, or the level here on the 30-minute, and you can see here. Here's this 44.97 is pretty key here. They're hanging, they're holding, but you see this footprint here at 0.79. You ought to see what it looked like on the bottom. Oh my God, I was not even up. It really sucked. I'll show you. Look at this at 44. Look at the low, 44.25. 245 to frickin' nothing. 245 to frickin' nothing. That means everybody was like, get me the hell out of Dodge. Look at that disparity. And guess what? That was the low. Now, I don't just go with the footprint, but look, 44.26 was the bottom of the range, this zone here. Oh my God, that was just awesome. But I actually wasn't up. I hadn't woken up at that. I wasn't up at that time. But that was like freaking unbelievable. Blake should be coming on.